Hi, yes, I'm still on my cruise. Behind me is Ocean Key in the Bahamas. And a couple days ago, I posted about an Amazon trade that I did that yesterday made 1.2%. And I'm going to show you exactly how that went in this video. So stay tuned. So it was just a couple of days ago that I decided to do this trade on Amazon. It's only a 2-day trade, and it had its ups and downs. But for 2 days, I got to make 1.2%. And if you look at the numbers that I put on the screen when I did the trade, we bought the stock at 93.02. It was Amazon stock. We did 500 shares, and that's 5 contracts, by the way. And then we sold the calls for $1.14. Our strike price was the 93, so those were right at the money. And again, 500 shares. It was a 2-day trade. Now, if the stock closed above the break-even point, which in this case was 91.88, we ended up making, well, we actually wanted it to close above 93, and that's what it did. But 91.88 was the break-even point. If it closed above 93, we ended up making $1.12. Okay? And that's 1.2% for just 2 days. It's a trade that happened to work out. And not all of them do, but this was a good one. And if you can repeat this over and over again, it creates massive, massive opportunities. So this is just one example of what we do in the cash flow machine. But what we did was this stock basically came to expiration and it was around $95. And so we sold the calls against it for the next week. And here's what those numbers look like. So you can take a look at, these are the options for next week. They go to March 10th. And today is March 3rd, essentially. Right after I did the trade, I took a little snippet of this so you can get an idea of what we did. And so the stock was right around 95. So at 95, you get $1.70 when you sell against it. Okay? So we're just going to sell against it. Now, you could have let this option expire, and it would have been taken away from you at 93. So your stocks, your 500 shares would have been taken away from you at the $93, even though the stock was at 95. Okay, boo-hoo, we don't get the extra $2. That's not why we're in this. We're in this for the income that we made, which is that $1.12 we talked about on the last screen. And so if you can change your mindset to say, hey, listen, I'm trying to get $1.12 out of this. I'm not trying to get $2 or $10 if it goes up. And basically, you're also building in a protection. If you can change your mindset to income and protection rather than trying to make a killing on a stock, you can do really, really well with covered calls. So we go ahead and sell the 95 calls for around $1.70, and pick up $1.70 for the week. If the stock stays above 95, and it's at 95 now, so there's a 50% probability it's over and a 50% probability it's under, roughly. If it stays above 95, you make $1.70. $1.70 on 95 is more than 1%. So if you can do this over and over again, just picking up 1% a week, and I'm showing you it's on Amazon, right? I don't think Amazon's going out of business. That's the big risk on covered calls, by the way. I see a lot of people saying, oh, yeah, you can make 1% on Amazon, but I can make 4% on Coinbase, or I can make 5% on, MicroStrategy, or I can make a bunch on AMC or GameStop or whatever. These are all crap companies, right? You want to have companies that are solid, that are going to be around for a while. So you don't have to go to sleep at night and worry that you're going to wake up and your stock is going to be out of business the next day. So you've got to really watch that. You want to make sure you're in a solid and exciting company. That's what we always talk about doing. But if you can do this 1% a week thing over and over again, right? That's about 4% a month, roughly. And it's not always going to work, by the way. Sometimes the stock is going to go down and you just keep doing this again, picking up your 1%. But if you can make that 1% in what we call juice every week, the compounding numbers are just ridiculous. So this trade was about $46,000 of capital that we used for the trade. It's 500 shares of Amazon at 93. We got a little bit of money back. So it's about $46,000. So I just put $46,000 into a calculator. This is a calculator that you can get on investor.gov. And it's a compound interest calculator. You put in $46,000. You say, well, if I can get $46,000 to compound for me over 10 years at 1% a week, let's call it 4% a month, and I can compound that, right? And I don't lose money and this and that, and the market doesn't go down, all these other things, but you got to have some assumptions. Then it turns into about $5.1 million in 10 years. Just taking $46,000 and trying to get that 1% a week. Now, you saw last week we went at the money. This week we're at the money and getting 1%. Now, if the stock moves up we're getting the maximum amount. Like, we don't care how much the stock goes over the strike price to be able to get our money, right? But if it goes down, we have a little bit of cushion. But we just want that stock to keep going up above our strike price every week. And if we can do that week in and week out, we can make 1% a week. Like I said before, it doesn't always happen, but we have to make some assumptions. So I don't know if you would be happy with this, but $46,000 turning into $5 million in 10 years. Okay, maybe it's unrealistic. Cut it in half. Say you're only going to make 0.5% a week, right? Maybe you're going to go a little deeper in the money, get more cushion, and a higher chance of making money. Fine. Okay, so it's going to be $2.5 million. Okay, cut it in half again. It's $1.25 million, right? On $46,000 in 10 years, if you're only making 0.25% a week. Whatever numbers you want to use, whatever you feel comfortable with, we try to shoot in our program, the Cash Flow Machine, for 1 to 2% a week or 2 to 4% a month. That's really our goal. Anything over that, you're probably taking too much risk. Anything under that, you're probably being a little bit too conservative. We try to shoot in that sweet spot. And now, like I said, we don't always get it. But when you can hit it fairly consistently and you can avoid big losses, which is a big part of this, and you can stay in the game, you end up compounding these returns over time. Like I just cut it in half twice for you. So that's basically only making 1/4 of the return. It's still a pretty good number. And so one last thing I want to leave you with is the way we make our money in the Cash Flow Machine by selling covered calls. And by the way, the Cash Flow Machine is a full system around selling covered calls. It's not just, hey, we do this willy-nilly, we pick a stock and we hope it gets called away. No, we have a system. We roll over the weekends. We have a system for how deep we go during bad markets or when the stock has earnings or whatever. We have a whole system around it. And I would recommend that if you're going to get involved in doing any kind of trading, that you have a system around it with rules, because I'll tell you, stock market trading and investing is emotional. And I always say this, when emotions go up, intelligence goes down. And if you start making emotional decisions, I don't know about you, but I don't make very good decisions when I'm emotional. I try to, use logic to make those decisions. And so I make those decisions in advance by having a set of rules. And that's what we teach in the Cash Flow Machine. If you want to find out more about it, I got a little commercial at the end. You can find out a little bit more. Subscribe to our newsletter. Go watch one on my master courses. Take a course. Join our mastermind. We have lots of different ways that you can get involved. Or you can just watch these free videos. But free videos aren't going to get you the full view of the whole system. You're just seeing a snippet of me doing the trades here. But the last thing I do want to leave you with is that we make our money from the time decay. And so if you look at this little chart, and you can find this chart anyway, this is anybody's chart, and at the bottom of it, it says something about, how many days to expiration, right? You see that there? And, it really doesn't matter if it's days or weeks or hours. The chart is exactly the same. You have this gradual decline in the value of the time premium. And in options, you're trading in the money amount, or called intrinsic value, and extrinsic value, which is what we call juice. It's out of the money amount or time premium. And that time premium always decays to zero as it approaches expiration. And this little chart that you see in front of you here is the chart that shows you how quickly it accelerates its decay. So the closer it gets to expiration, the quicker you get the decay. Well, that's great if you're a seller, right? If you're a buyer, not so much, because you're losing time value as the expiration date approaches. But if you're a seller, you already got the money. And so you have to buy it back for that time premium. You have to buy that back for cheap. So if you wait till the moment before expiration, you get to buy it back for about nothing, or a penny or 5 pennies or whatever. And so that's what we do, is we sell the call, and then we'll have to buy it back and roll it to the next week, which is what we do in our Cash Flow Machine system. And we just do it over and over again, and you can get those incredible results. I'm not saying you're going to get those incredible results. I'm just saying this is the way we do it, and this is the way that I've done it for years and years and years. And that's why I can get on here and tell you, hey, here's what I'm doing, and show you the trades. And, I hope this is instructive for you. And if I can do anything for you down the road, please let me know. Also, if you want to have me make a video or something specifically to a question that you have, we're starting to get a lot of the same questions in the comments, put it in the comments below. And if you would, I would really appreciate your liking, subscribing, turning on the notification bell. I'm trying to put out these videos a lot. It's not investment advice. These are investment ideas for you to consider, and maybe go get some investment advice if you need it, or at least ponder it, kick it around with your team. But this is really for information and education purposes only, not for investment advice. But nonetheless, this is what we're doing, and I hope it's helpful. Have a great day, and thanks for watching.
Hi, Mark Yegi here, wealth architect and creator of the Cash Flow Machine investing system. Listen, what you just saw is just one part of my system for creating reliable income of 2 to 4% a month from the stock market. But you know that if it were that easy, everybody would do it, right? So if you want to learn how to create investment income the right way, then you need to learn and have a system with rules and what-if strategies so that you can learn what to do when the market goes against you, what to do when the stock goes against you, how to adjust your trade so that it's always in a winning position, how much to risk, how to build a multi-million-dollar portfolio that creates income of $10,000, $20,000, or $30,000 a month in semi-passive income. Best of all, the whole Cash Flow Machine system takes less than an hour a week to implement. Just go to the link below to learn more about our system or go to cashflowmachine.io. See you there.